All right, welcome to the show. Contractor Talk with Richie Kidwell, building damage experts. Thank you for joining our show today. Today is July 11th, 2024, otherwise known as 7-Eleven Day.
Free Slurpee
Day. I'm your host, Richie Kidwell. Thanks again for joining us. And we have Hans Kennon with Kennon Law Firm joining us today. And it has been a great presence on our show almost every week here on Contractor Talk with Richie Kidwell. What's going on, Hans?
I've done this a lot of years now. It's good to be back. The summer is slowly starting to wane. We had one big hurricane already, something to watch. I'm going to keep an eye on. I now have the National Hurricane Center on texting me if something pops up or something happens. So plenty to look at, plenty to talk about, a lot going on in the insurance market.
Yes, it is. And let me just remind us all that if you're listening to us on Spotify or Facebook or some other mechanism, we also are on YouTube as well. And you will see the full video and audio portions there. Spotify and other streaming mechanisms, obviously, there's just audio, no video. So just a reminder, if you're listening to us on an audio type of thing, although we do have a face for radio, you can always check us out here on YouTube and see the whole video there, put a face to the name, other outlets that we travel on here on Contractor Talk with Richie Kidwell. So I just wanted to bring that up. All right. So today, being that we're in July, in the middle of, the start of hurricane or storm season here in the state of Florida, we talk a lot about insurance-related claims or property insurance-related claims. What to do, who to call, and what to review in your policy of insurance. Are you covered? Do you have a good neighbor? Are you in good hands? That's always the question that we ask you as a consumer listening in or a contractor who is working with a homeowner within the fines of their policy of insurance. And so a lot of our folks are storm chasers or folks that show up after a major event or storm to help assist the community of building it back. And within that, a lot of the folks that they help are waiting or are dependent on their proceeds of insurance that they've paid for 30 plus years or whatever it is. We've seen so many folks that have paid for their same policy of insurance or the same company rather over and over again 20, 30 years, and they have their one time of loss of major catastrophe or event over their property, and they're struggling to get paid on that claim, and they lose their minds. And we see that happening over and over again, and you do as a property attorney that assists clients in litigation to get what's rightfully theirs to begin with.
Yeah, I mean, we see that often. I mean, there's kind of a bit of a metric to it. You see, I always say insurers are always good at counting money. They know what claims they have to pay, what claims they don't have to pay. And they know that there's a certain number of people who won't contest the denial at all or a low payment. And the insurer psychology has changed a little bit over time. Some insurers still stick with the no payment, the denied claim, which kind of gets everybody kind of concerned about. They're like, denied? How can it be denied? Some insurers have gone to we're going to pay you just a little bit of money over deductible or just a little bit under deductible, so at least you feel like they've done a better job of adjusting the claim. But obviously we see a lot of both. Citizens is big on denials. Some of the insurers, American Integrity, tends to pay you a little bit of money or get something just under deductible. But they know who's going to fight, who's not going to fight, how many of them, and they know at a certain point they're going to push hard enough, and that's going to make some policyholder give me a call and go, I just don't think that's right. I don't think they can pay me $1, or I don't think my damages are more than just $1 under my deductible. So we do see obviously a lot of that, and like I said, I know there's some statistics recently. Rich and I were talking about before we went on air that three of the big insurers we talk about State Farm, Allstate, and Castle Key, and Castle Key is owned by Allstate. That I think for the year of 2022. They all three were just right around 47% of their claims were closed without any payment. Exactly. It's hard to believe.
And the article I have right in here, it literally says this. The two companies, talking about Allstate, Castle Key, have been historically at the top of the pack in the last few years. In 2021 and 2022, State Farm being right in the middle now. They said now it's Allstate, then Snake Farm, and then Castle Key, or however that works out, but they're the top three either way. State Farm closed more than half of its claims without making a payment. That's in 2021, 2022. 2 years ago, so did both Castle Key companies. And this is straight out of this article from the Miami Herald titled, "These Florida property insurers are stiffing half their customers, secret data shows." I
mean, think about that. I mean, imagine if you own a business like you do, or like a law firm that I do, and on half of the people who paid me, right, and they're not working for nothing, half the people who paid their premiums to me, half of them got nothing.
That's crazy. And here's how they do it, Hans. And obviously you know about this and you see it all the time, is where the insurance company shows up, they evaluate the claim, they know what the deductible is, and they say that we recognize you have damages, Mr. Kennon. However, your deductible is whatever 2% of your policy, and you're in a residential home. And I've also seen a commercial policy much higher deductible, but say we recognize you have damages, Mr. Kennon. It comes up to, ooh, man, just barely under your deductible. So at this point, there are no payments forthcoming, but we are paying you for your damages, about $7,985. Too bad your deductible is $8,000. So,
right.
Sorry about that. And so they're not admitting. I mean, they're admitting that there are damages and that they're covering the damages.
Right.
And then furthermore, you've heard and you've deposed TPAs, these third-party adjusters who adjust these claims. And under Depo, they've said, no, I've sent in a full replacement estimate for the roof and interior damages and such. But then when the insured gets the final estimate and payment, it ends up being under the deductible and only repairs. And that's because the desk adjuster for that same insurance company changed it.
Well, actually, I mean, the one in the case you're talking about, and the thing is, you don't ever find it out unless you're in litigation. If you're not in litigation, you're never going to find out that there was multiple estimates or conversation between the field adjuster and the insurer. In my case, we were deposing the field adjuster, and we asked him about his estimate, and we asked why there was nothing in that for the roof, because he'd written for the interior having damage. And usually if they write for the interior, the normal will at least acknowledge or write for the roof. And he said, well, I did include the roof. And we're like, well, it's not on the estimate. He goes, well, no, I know. The insurer told me to take the roof out. To which you go, wait, I'm sorry. I must have missed that. What did you say? And he goes, no, the insurer told us to take the roof out and not put any inside. And you just watch him say it, and you just stop and go, like, it's almost, you're almost incredulous. I've been doing this a long time, and even every once in a while I still get caught, and I go, really? Like, just that unabashedly, the guy's just like, and he seemed like a principled guy. He didn't seem happy about having to say it, but he's under oath, and he told the truth that they had done that. And it's amazing what I would call hubris. Like, the insurer's going, what are you really going to do? So I file a bad faith notice, because that conduct is the textbook definition of bad faith insurer conduct, and they still haven't settled the case. I mean, they're still like, we're thinking about it. I'm like, this is bad. I mean, this is actually something. This is intentional. This is like criminal. You intended to deprive your policyholder of benefits that an independent field adjuster went out and found, and you're just going, nah, we're just not going to pay it.
Right. And when they get to the point, when they do get to the point of settlement, then the carrier pays the fee and then throws their hands up and admits to no wrongdoing at all.
Exactly. And in fact, they'll make you release your bad faith claim because that's part of the settlement. And most of your clients, I'm a nice guy, but no, they don't want to be friends with me forever. And they're like, you mean I can settle it today, get a new roof, get all my house fixed, and be done with this? And I tell them, I said, yes, that'll do that. I said, it won't penalize them for the bad faith conduct they drug around for the last couple of years and told a person to change his estimate. But honestly, most people just go, I want to get my house back in order. I want to get my life back to normal. And a lot of people,
and they know that.
Yeah. And exactly. The insurer knows that most insureds just want to go back to how it was. So it's even hard to get an insured to go forward on a bad faith case just because they're tired. Right? They're not in a litigation business. I had a lady today, she said, well, are they going to give us a hard time? And I literally stopped and I said, ma'am, I'm really in the hard time business. That's really, they're going to give me a hard time? Yeah, but that's our business. And she kind of chuckled and I went, Really is. It really is. That's what we do every day. If someone gives us a hard time, we have to give one back. That's how it goes.
Right. And in this article I mentioned, these Florida property insurers are stiffing half their customers, secret data shows. That's the title of it. The beginning of it reads like this. Floridians filing a homeowner's insurance claim had the lowest chance in all 50 states of getting a check from their insurer in 2022, with more than a third of the claims going unpaid. And last year, those filing claims with two of the state's largest, healthiest companies, subsidiaries of State Farm and Allstate, had the lowest chances of all. Nearly half of all claims closed by those companies last year went unpaid.
Now, real quick, one thing. Last year, or maybe a year and a half ago now, the reason they changed a lot of the laws was because somebody said, we have more litigation and more litigation over claims than anybody else in the United States. And that data, to my recollection, I never heard that before because that's newer data. So basically what they said, we have to change the laws and make the insureds be responsible for payment of their attorney's fees and costs instead of the insurance company, because we have an unfair amount of litigation against insurers. And now you find out, subsequent to that statutory change that the governor signed, you now find out that the reason we have more litigation than any other state in the country, at least arguably under that data, which we think was flawed anyway, assuming it's correct, we have more litigation against insurers because half of the claims get closed with no payment.
That's right. I mean, right there tells us that if 50% of the claims that were filed, I mean, you're going to run into these folks that are they're scratching their head going, Hurricane Ian, who hit at a Cat 5, went over my house. My roof was there on Monday. On Tuesday, it was not. And you're telling me that A, it's a small repair and it's under my deductible, and B, no payments coming? Like, what in this world? And then you have a neighbor who was fully compensated, but they were with a different carrier. Same neighborhood, same storm, same damages, fully replaced.
Or just had a different adjuster. I had
the same company.
I had a case recently where they denied my client roof replacement, and we were talking. I tried to find out what they know about their neighbors. And he said, the guy next door has the same insurer that I do. And they replaced his roof like that day, not that day, but, like approved it right away. And I said, same insurer? He said, yeah. So we were in having a discussion with the adjuster, and I said, a guy less than 50 feet away, insured by your company, approved a roof for houses that were built within the same year, same model, same development, same cul-de-sac, right next door. And to their credit, they came back and they paid it. But to have to go to that extent where some supervisor somewhere should have said, that's weird. We paid on house A and we didn't pay house B at all. So one gets a full replacement, one gets a full denial, and they're less than 50 feet apart. Probably less than 25 feet apart. Same model, same year of construction, same age of the roof. And yet one guy gets one and the other guy doesn't. And you see that often. You really do.
You do. And going back to those TPAs, going back to these folks that are literally hired to wrongfully deny a claim, undervalue a claim, and then the insurer loves it because they're third party. They're the ones that did it. But then you talk to the third party adjusters, and they say, well, at first I was doing good. I would write good estimates. I got paid for it. And then the insurer says, hey, we need you to write less estimates. We're going to pay you on a different scale now. Instead, they used to pay them on a percentage of what they wrote. And so, and then they changed it to a flat fee. And then from what I understand, they ended up just paying him a much smaller flat fee. Everybody does it different, but they hire these folks so they can then have an arm's length distance and say, oh, it was the TPA who wrote this for under deductible. But in the same, they tell the TPA, if you don't write it like this, we're not going to give you any more work.
Right. I mean, you depose the adjuster sometimes and you'll say, do you like working for this insurance company? Yeah. What else are they going to say?
Right.
Would you like more work from this insurance carrier? They're not going to say no. They're going to say, well, sure. So you'd have to make sure that your client is happy with you and do what they ask of you in order to continue to get the business. And and they start getting a little more uncomfortable with that line of questioning. But we see it all the time. It's like engineering firms. You depose those guys. They're doing 100% of their work is for one insurance company. And you see that the engineering firms are getting paid. 15 years ago, I tried a case. I remember when that became a big focus. I paid like $1.5 million. It was some small insurer. It was some tiny insurance company. And they paid like $1.5 million for engineering to deny claims.
Right.
And I remember reading that. I did a request for admission. I said, please admit that whoever the insurer was paid $1.5 million and change to this engineering company. And I remember I read it out loud. I read it because you read it to the jury and read it into evidence. And I read this statement and I said, admit it. And every juror was like, oh. Because those numbers were just surprisingly large. So the fact that their primary method of support for their claims are people they're paying seven figures to year in and year out,
they are.
Just to provide that testimony. And it's
right.
They
pay. It seems to me they pay more money to deny claims. Why wouldn't they just pay the claim? To begin with. I talk about that to my clients all the time. If someone gets a little unbridled at me or a little bugged at whatever about what I do, and I always say, want to put me out of business tomorrow? Pay claims. That's right.
I'm doing this 28 years. If you paid the claim, and I realize there's always some bad apples here and there, whatever you want to say, but essentially, if you paid every claim, I'm out of business tomorrow.
Right. Well, and let's say this. Let's say if insurance companies paid valid claims, and even at a discount, like say for instance, if you paid me fast, if I had a water loss and you showed up to my house and it cost me $20,000 to fix, but you gave me $15,000 or something close, like right away, and I started work and I'd be like, you know what, fuck it, I'm not. I can say fuck it. I'm not on the radio anymore, but I would say that I was a customer. I'm close enough, right? Maybe the juice wouldn't be worth the squeeze at that point to get the rest from my insurance company. I'd be like, you know what, they gave me enough to get to a certain point.
Right.
I'm not that pissy. But if you screw me out of the whole $20,000, I'm going to be pissed. I want my full $20,000 plus attorney's fees plus interest plus. So it would seem to me, why don't you just at least pay something and short pay your clients rather than just not pay them?
Well, I was told when we go to mediation, I tell clients, what was a $25,000 claim or $50,000 claim, and the insurer will offer like $1,000, and I'll say, well, look, here's what you got to do. They have to offer enough money, and there's like a universal thing that at least Americans do, and probably everybody does around the planet. At some point, if someone offers you money on some deal, and you stop and you go, when you think, you kind of nod your head and you go,
well, it's time value of money. What can I do with that money now?
I said, that's decision money.
Yeah.
Anything less than making that face and saying, I can make that work. And I agree with you. That's what I think the point of what I'm saying is if the insurers come out and gave you decision money that was even 20 or 30% under what they should pay, almost everyone would take it because it gets it done. They're almost back to normal. They appreciate the effort. It moves things along. They do it all the time. And I would be out of work, yet they don't. They instead they pay $0 or $500 or under deductible. Again, my income is solely based on it.
And then you get a rap like State Farm and Allstate that they don't pay half of their claims. And we have the real data here that shows that in Florida, if you file a claim, you have a 50-50 chance of getting your claim paid.
And that data is the data provided by the insurers to Department of Financial Services, isn't it?
The Office of Insurance Regulation.
Oh, I'm sorry. So that's not like somebody going in. That's literally the insurers themselves reporting those numbers to the state of Florida.
That is. And that comes from this data. And within the same article I mentioned, here's the portion that says data remains a secret. Beaker or whatever, I don't know how you pronounce it. The Office of Insurance Regulation spokesperson said the office couldn't comment on the data because the information was a trade secret that had to be protected under state law. Regulators across the country and insurance companies have repeatedly fought the release of detailed information about how the insurer handles claims. Even simple but important information, such as the average homeowner premium in every state, isn't released until 3 years later when it's no longer useful. The department's office secretary was hypocritical when former insurance commissioner David Altmaier was president of the National Association of Insurance Commissioners. He used quote-unquote secret data on insurers' rates of litigation and released a report claiming that Florida made up 8% of all homeowners claims and 76% of all litigation against insurers. That's the fact that we all remember, Hans.
Yeah.
That was brought up on the legislature. And I remember FJA saying, well, no, that doesn't include all the pipe freeze claims in Texas, all the non-wind claims.
I think cut out Texas and California.
Right, and all non-wind related claims.
Right. Well, but that was a number that everyone like, that was what they said,
and omitted Texas, I think.
Yeah.
And I think when we said that and when it was stated to them, and I think Senator douchebag, him, he is a douchebag too, but the guy that thinks he's cool, it'll come back to me, Brandeis. Brandeis.
Right.
His comment to that, he's such a douche. He literally said, he's like, well, yeah, so it admitted Montana. There's like, 5 people that live there? But he didn't claim to anything else that we said. Well, what about the non-wind related claims, like the pipe freeze claims in Texas? What about all the stuff that happens in New York? Because New York was admitted too. And he's like, never mentioned that. Yeah. And it was just glossed it over. Like, this is still a real fact. But you didn't have all of the claims together.
Yeah, so it lacked bullshit. Data. And then what supports our position that it's not accurate. I mean, it can be true but not accurate, right? I mean, assume they included all the states in that number. That still doesn't represent the fact that half of the claims are getting unpaid.
Right.
I mean, all that number tells you is how many claims are made, or how much litigation there is. It doesn't say, oh, by the way, the reason that happened is that the three of the biggest insurers in the United States pay less than half of their claims in Florida.
Right. And that's good to know as a consumer. When you're shopping right now, we're going into storm season, and you want to make sure you have the right policy. And one of the folks I was talking to today was like, yeah, I didn't really have time to shop, so I just got Snake Farm.
Right.
And I said, wow. And especially after reading this article, I said, you have a 50-50 shot of getting your claim paid. So you're really just putting your money out there and not going to get a return. It's literally you're burning your money.
Yeah.
When you're paying Allstate or State Farm, and it literally says it on here, 50% of their claims last year. This is statistics found on the Office of Insurance Regulation. 50% of the time they're not paying you. They're not paying your claim. And you see Hurricane Beryl, who was our first hurricane of 2024, barreling through Mexico, Texas.
Jamaica, Grenada, hit Grenada at 155 miles an hour, then went through Jamaica. Big storm. I mean, and it's an odd time of year. I mean, typically we have always talk about the fact that the last big barrage of storms was in 2004, Charlie, Francis, Ivan, Gene. And they were all in essentially June, July, because my son was born on July 10th, and we brought him home. It was only like a week, and the next storm hit. So I always remember that. But that was the last group of storms we had that were that early on. They've been later and later. We talk about Ian being in September and Nicole being in November. A lot of them have gotten later in the season. So to have that big a storm roll through, and obviously mostly because of the warm water of the Gulf, it really seemed to come out of, for me, it was a relative nowhere storm. It just suddenly all of a sudden was there, and it had real teeth to it. And it was a major, because of the speed of the winds, again, hitting Grenada at 155 miles an hour. I mean, that's a real storm. I mean, it's surprising it's that early. But again, they talked about having a more active storm season this year anyway.
Right. So we started off with this being one of the earliest storms because I think it incepted in June. So it says it's the earliest start of a storm. I don't know to date. Maybe that was it.
It's been a long time either way.
Right. So I'm looking at a Newsweek article now is saying that Hurricane Beryl is responsible for at least $3.3 billion in damages so far, with the storm killing at least 11 people in the Caribbean, according to the Associated Press. 6 people in Texas, 1 person in Louisiana were also killed.
Really? In Texas, that many people? Wow.
Yeah, believe that or not.
Wow.
Storm surge must have been pretty decent there. AP on Thursday reported a firm that works on damage estimates found the storm is responsible for $2.7 billion in privately insured U.S. losses. Also calculated the storm caused about $90 million in damage in Mexico and $510 million in the Caribbean. So already the storm activities here close to and around Florida, or there's our Gulf Coast, our Atlantic coast, are warming up. So be prepared. And as we've talked about, the topic of the show is about selecting the right insurance policy, knowing that, State Farm, Allstate pays 50% of their claims, right? With Allstate Castle Key being the same. You've got subsidiaries of State Farm Florida, being the crooked one here. We're talking about Florida property insurers stiffing half of their customers from their right to receive their what they're owed in damages under policy they've paid for years and years. It's crazy.
It is really something. I mean, we talk about the payments that are made. And something to keep in mind is this is money that you're already owed. I mean, this is not a personal injury case with pain and suffering, intangible damages. This is money you need to return your home to its pre-loss condition. So when you have to go fight for it, and the reality is that when this type of thing happens, all you want is your home back to how it was. It's really all you're looking for. Right. And these policies don't provide anything, not that they're supposed to, but they're supposed to provide enough resources to put your home back how it was. We talked a little about some statutory changes that make it now where you, as my client, has to pay me out of your proceeds instead of having the insurer pay me in addition to what you're already owed. Obviously, that's a huge change after 110, 120 years of it being different than that. And it really puts people in a tough place where I used to be able to say to them, look, all the money comes in, it's all yours. The insurance company will pay me separately. And now that's different. And we're trying to work through that and still get everybody to as close as we can. But that's been a big change in Florida, and that was precipitated by the insurance companies lobbying the governor to try to make things, to try to convince the average consumer that their financial abilities are the same as a major insurance company, and that they should be paying for the insurer's wrongful conduct out of their proceeds to me instead of making the insurer pay.
Right. I'm so ashamed of how Florida has treated consumers here in the state of Florida. We used to have a decent consumer advocate in Tallahassee, and over the years they've been whittled away to be and do whatever the bidding is of Citizens and the governor's office. They're all there in Tallahassee. Citizens is owned by the state of Florida, and they literally walk down the same hallways of the legislators, the CFO's office, DFS, OIR. They're all dirty. They're all doing whatever the insurance lobby bidding is. And anytime I've been there during legislative sessions, it's so ancestral how you have the insurance lobby. You have Mark Delegard, which is a very powerful lobbyist that represents State Farm. He runs the legislature. When I'm there and I'm trying to get things done, I have to meet with him. It's like our lobbying. It's like we have to get it passed through Mark. It's like, what are we doing? Why is he running everything when our legislators are supposed to be running this, not the lobbying firms that have the money? And I still can't get this. You've got the consumer advocate, you got the CFO's office, DFS, OIR, who are not supposed to be taking money from the insurance lobby, but they do. And it's like, what the hell is going on? Well,
I thought an example that we were talking about earlier, and you probably have the stats more than I do, I think, is a couple of years ago, they essentially outlawed the assignment of benefits, which was hailed as landmark legislation to protecting consumers. And all that really did was mean that the folks who are most skilled and sophisticated in navigating the insurance company's antics and shenanigans were no longer allowed to assist you and as part of that, do the work you needed to have done. And it was also discussed in legislative session that this was a huge expense to the insurance companies. It was going to bankrupt insurers. If we didn't get rid of the assignment of benefits, it would bankrupt the insurers if they stopped having statutory attorney's fees for claims that were made. And I think Richie found there was some discussion recently that despite the fact that they said it would bankrupt the entire industry, that the data now finally being provided. It's interesting. The data always comes out after they change the statute. So they make it a huge crisis. We would kind of kid about the insurance crisis. They make it a crisis, get what the insurance companies want to have changed, only to find out several years later that the public's been hoodwinked into actually believing that this was true. So they get less coverage, less assistance, less sophisticated help in managing their claim, all those things. And I think they determined that it was only I think you said maybe 2% of the legal fees.
Yes, here we go. I just found it. According to Frontline's insurance rate hearing today, and this was a few weeks ago, and again, today is July 11th, 2024, so a few weeks before today, Frontline Insurance had a rate hearing at OIR. The removal today, the removal of one-way attorney's fees and elimination of assignment of benefits, the AOB, only caused a premium discount of 2.5% for wind and 2% for all other perils, AOP, and they are requesting an increase of 14.7%, just under the 15% threshold
for a public hearing.
For a public hearing.
Now, keep in mind what Richie just read is that all of the fear that they fear-mongered into the legislature, which really the legislature wasn't really scared. Actually, they knew it was all a bit of a hoax and would help them line their coffers for re-election, was that 2% of the deductible is what they're talking about, was attributable to assignment of benefits and lawyers, which is a minuscule amount in comparison to everything else they spend, like their lobbying money they spend, the money they spend to buy the politicians, the money they pay defense lawyers to fight valid claims, the engineers they spend millions of dollars on to not pay. I had a case the other day, literally $12,000, and they had an independent field adjuster, they had an engineer go out, they had a Google survey done. I mean, and I looked at the guy and said, how much more are you going to spend on this before you just pay it? I said, you've spent about half the claim right now, and we haven't even gone into litigation. You're going to start paying lawyers and other in-house people to look at this. It was shocking to me. I mean, but then today I had a case where I got it done. It was literally the way it worked out. The guy had a 2-story house, so the roof's not that big. I mean, we're used to single-story homes in Florida. They have usually 35, 40, 50 square roofs, right. Which is a big roof. This guy had a 27 square roof because he had a 2-story house. It just went up and it was a small roof, but he had all the same square footage.
Right.
And I said to the guy, he's like, I got $500 to pay today. And I'm like, I said, how much money do you want to spend on this case? I said, seriously, it's a 27 square roof. It's like I said, I can sell the case right now. And the guy had a big deductible, but he knew that, for less than $15,000. And to shocking me, they came back and they said, okay, we'll pay it. I literally, wow. It's a good thing I was sitting down because it would have fallen down. And I stopped and I went, that's the right thing to do. The insured is getting a new roof, has to pay a deductible because that's a crime these days, and that's how they want to do it. He's going to pay his deductible, get his roof done. I got paid some money on that because obviously that's how it has to work now. All those things. And that claim got closed for less than $15,000.
If they would have litigated that claim,
it would cost them probably about $100 in the end. In all honesty, between my time, the other lawyer's time, the court's time, all those things, and I really sat back and I went, that was how it's supposed to go. The guy shouldn't even honestly need me, but if he does, we still got it all done. And I was like, and this is the Washington Post had an article last year that said uncontested claims by the insurer cost about $11,000, and claims that are contested going to litigation cost the insurer about $40,000. Right. Which goes back to my analogy when I said, so for everyone they litigate, they could have paid $4. And I got to go sue them pretty often because they won't pay the claim. And I keep saying to myself, how many claims could you have paid instead of fighting me on this one?
Right. Exactly. And it astonishes me the same as well. When I deal with these insurance companies, I have a lot of smaller invoices, but even we come to them and we say, listen, you can knock out these group of invoices for 70 cents on the dollar, like under what the normal value would be of paying full amount of the invoice, which you owe anyways. The service has already been performed. You actually owe RCV, replacement cost value, which is the full value of what the cost is. You actually owe that under the policy, but I'm going to give you a discount on that if you pay me today. Right. And astonishingly enough, they still say, nope, you know what? Fuck you, sue me. And
they'll fight you on every claim individually, no less.
Yes, and it's going to cost them 10 times the amount more. Let's say, it's so much more money they're going to spend. I mean, I have some real data on this because I've been doing this for a while, but it's still, I scratch my head and I say, man, you guys could have saved yourself so much money. I'm just one small little cog in a big wheel, and in the way that they treat me is the same way that they treat everyone else, a much bigger level. So it's like, if you're paying 10 times the amount than you would have by settling just on little old me, I can imagine what type of bad business decisions you're making. Look at Avatar, the small little insurance company had 30,000 policies. They didn't make it that far because they fought everything to the death.
They did. And
they fought well more on denying claims than they would on paying valid claims.
Yeah. And you're right. And they ended up going out of business, went into rehabilitation, did not come out. And that was exactly, their mantra at the beginning was...
UPC did the same thing.
We're going to fight, we're going to fight, we're going to fight. And so they literally dug their own hole, because I ended up suing. I sued Avatar all the time because they literally just would not pay. And they didn't have the financial resources of State Farm or Allstate or Castle Key. They didn't have the depth. Because actually, you don't need a lot of... I mean, one thing to keep in mind, if you're not familiar with Florida's insurance system, in all honesty, State Farm goes out of business, Allstate goes out of business, Progressive goes out of business. You know what? We got a problem. I mean, there's a legitimate national problem if those companies fail. I'll just say that. All you need to finance an insurance company in Florida back with Avatar was $10 million in unreserved, just in capital,
right?
Plus another
assets and
five or something. I mean,
it's
now
total of $15 million. Is now what you have to start an insurance company.
And $15 million. I mean, it's nothing to sneeze at. It's still a lot of money, but compared to the billions that State Farm, Allstate, Progressive, and those folks have, so Avatar came in. And they just fought everything, didn't pay anything, and then they kept having more and more. They lost more and more.
Yeah, they did.
And then when they finally starting to pay stuff, they finally did after years of fighting. They were just like they were just battle worn. They just end up running out of money, and then all those claims, if you don't know, get dumped on FIGA, the Florida Insurance Guarantee Association.
Yep.
Which is paid for by all of us policyholders. If you look at the bottom right, usually of your declaration sheet, there's some amount of money put aside for FIGA. So they fought, didn't pay claims, go out of business. All their claims go to FIGA. FIGA then using other policyholders' money and the government's money, then pays those claims that should have been paid by the insurer had they handled them properly.
Yeah, I'm still always at a loss to see why they do that. And FedNat was named in that last article that I read, and they as well were one of the ones that well, there's Frontline and there's FedNat. So they're talking about Frontline. My bad. They're still around. FedNat went under. Now FedNat was also known as trying to do their same stuff in Louisiana as they did in Florida, and they got heavily fined in Louisiana because they don't play that game in Louisiana at all. And so they got a big fine there. They mishandle and mistreat clients here in the state of Florida, and they were slowly getting their ass kicked to the point to where they finally went into receivership, and they gave all the claims over. Well, here's the bad thing:
all the policies,
they gave all the claims over to FIGA. They rolled all the good policies, 72,000 policies, over to Monarch.
Yep.
And then Monarch tried to do what they could with them, right? Because Monarch was the parent company of FedNat, and I believe they rolled into receivership. Is Monarch still around?
No, Monarch's still around. Okay, unless it happened very, very recently.
So, well, what happened? That's what it was. Monarch's still around, but then when they had bad claims that were from the FedNat, they rolled those into FIGA,
right?
And they just kept a good policy.
Yeah.
Very similar to UPC busting out of Florida and giving 92,000 policies back to the state, basically,
right? Where
the state took all the claims and then they rolled all the good policies over to our boy Bruce Lucas
Slide
over at Slide.
Well, and there's another discussion that many years ago when Heritage was first opening, Heritage was fined about $1 million within the last 12 months or so for similar antics we've been talking about. That somehow $52 million worth of state money. After Mr. Lucas, who owned Heritage at the time, gave $110,000. Here's what I'm stunned about. Mr. Lucas gives $110,000 to Rick Scott, who's the governor at the time. Gets like $50 million in policy in money and policies to handle. for $110,000. And I'm always surprised when I read these articles when government employees give away millions of dollars, and they got like 10 grand from some guy.
Right.
There's an article this morning, and this a little bit of an aside, by a marijuana grower who gave $100,000 to Ron DeSantis recently, arguably in exchange for him vetoing a bill relating to marijuana growing, which those guys said would put him out of business. So it just, he gave him like not a lot of money and just got this bill that made him millions and millions of dollars. and I'm just shocked. I'm just shocked by it. But either way, talking about Mr. Lucas gaining the benefit of the state of Florida, Rick Scott gave him $100,000, got I think it was $52 million. It said in one of the articles worth of policies.
Yeah.
I mean, just the money is outrageous.
I mean, coming from Enron to leave there.
Yes.
That whole debacle, come to Florida and then just be given the best present that you ever possibly could. The guy's got generational money. He's got fuck you money for the rest of his life, and so does all of his family because of the state of Florida. It's crazy. Good for him. Anyways, so with that said, I think it's good to know who you want to or who you have for property insurance right now. If I were you, I would not trust State Farm, Allstate, Castle Key, as we've read that 50% of their claims that get filed last year alone, just in 2023. Not talking about 2021 and 2022. They were 47%. They were still almost there, and last year they crossed the threshold of 50% of paying or not paying any claims. So I would suggest you find another insurance company. I ended up finding Loggerhead Insurance.
Oh, that's right.
Started in 2022 from AAA. The executives went to Tampa, started a new company there. I think they have great policies, great premiums. Mm-hmm. I have them for my house. I saved 50% of my policy premium from Heritage to switching over to Loggerhead, and I have more coverage. So there are other companies for you to check. This is the time that you want to shop, and you can shop your insurance anytime. Even if you got insurance yesterday, you can still shop for a new insurance company today to save you money. They will refund your premium once you do select a new insurance company. So it's not too late at any time, especially for storm season. Get a good, valid policy of insurance. Look out for exclusions. Look out for limitations. Look out for caps.
Yep. I agree. And if your insurer if Citizens is allowing an insurer to take your policy out and under their wing, make sure you follow what the premium is, because if you just go, oh, good, someone else has it now, if the premium's more, it'll drain your escrow account and you won't know it, and that money's going to be gone.
That's right. And I switched insurance in the same year, so it double paid out of my escrow.
Right.
So I had to go online, which that was a whole thing of trying to figure out my online thing, whatever. Anyways, I finally got back online, and I made that, and I got a check back from the insurance. I had to deposit that and then go back online and make a payment to my escrow account to even it out.
Right.
So just so you know that if you get a check in the mail and you're like, oh, hell yeah, because it was like $4 or $5 grand.
Right.
And then I was like, oh, yeah. I'm like, oh, crap. I got to pay it right back to my escrow account.
That's not an overpayment. It's just a reimbursement that you're going to have to put back into that account in order to make sure your insurance stays current. Because
my payment did go up several $100, like $500 extra a month. Like, what is this? As soon as I made that escrow payment, it went back down to normal. I was like, okay, right. There it is. So just don't forget about that. You can change insurance companies, especially now before storm season. State Farm, Allstate, Castle keep paying 50% of their storm-related claims on property damage claims. I would definitely not recommend Snake Farm or Allstate due to these facts here. So anyways, if you learn anything, there are other folks that you can use to shop. Not every agent has all of the same insurance companies in their portfolios. So shop agents as well as directly from the insurance company itself. So go on, believe it or not, Office of Insurance Regulation. If you search Florida, OIR, property insurance quotes, there's a section on the Office of Insurance Regulation where you can shop different insurance companies, and it'll ask you what county you're in, and a little bit about your house. Select the $350,000 or $150,000, and residential, and it'll give you a bunch of insurance companies and approximately their rates. Go to each one of their websites, try to get a quote for them, or see if they write for you, and maybe you'll find a cheaper property policy of insurance for the year.
Yeah, that'd be good. You got to keep looking around. You got to be vigilant, just like with your insurance company. Keep the same eye on your house. Do a walk-around inspection now. Take a bunch of pictures of your house. Take a bunch of pictures of the inside of your house. Take pictures of your closet. your stuff you own, stuff that you forget how many you have of certain things. Make sure you just get some good establishing pictures, because if the insurer, something bad happens, insurance says how many shoes do you have or how many shirts you have, and you go, oh, I don't know, I have a bunch. Well, can you detail each one of the shirts for me on this property form? Oh, I don't know about that.
Right, can you fill out this inventory form of everything
Exactly.
that you have? I've never done this before.
Like socks. I'm thinking about how many socks you have in your drawer. Really, just and all that stuff. You have to go to an issue here is you got to go replace it.
Right.
Or else they're not going to pay you. They're not going to be like, well, I had a lot, so pay me a bunch of money. They're going to be like, no. So take a lot of pictures. Pictures are cheap these days.
And if you don't know what you're doing, it's a good time for you to save an attorney's phone number in your phone right now, in case you are dealing with a claim here in the state of Florida. No matter what type of insurance, Hans handles it all, whether it's property, auto, medical, life insurance, doesn't matter. Give him a call on that, because you know who does know how to do the inventory check for you? That's going to be an attorney or a public adjuster. And the best thing for you to do is go straight to the attorney. They can file the claim for you. They can take over the claim. They can help you supplement your claim. If they paid you a little bit, but they owe you more, whatever stage you're in, an attorney can help you out with that. So how can they get a hold of you, Hans?
Hold of me on my office line is 407-464-HANS, 407-464-HANS, which is 407-464-4267. Feel free to just call in. I have some great staff been with me for many, many years. Or you get a hold of me, that's certainly fine. Happy to chat with you about whatever you have going on. But feel free to give me a call if you got questions going into this season about what's this in my policy, what does this mean, how does this work. Give me a call. We're happy to help.
That's awesome. Perfect. And always here for you guys as a resource, Contractor Talk with Richie Kidwell, just to bring up these current issues that we've been seeing here in the news and on the Miami Herald recent article about the property insurers stiffing half of their customers. Bringing this data to you because I think it's important to consumers and even contractors telling the consumers, because they get asked all the time. I get asked all the time. It's like, oh, what insurance company do you recommend? I have Citizens or I have State Farm. I was like, oof, those guys we see all the time, always having a problem. It's the carriers that we don't see on the regular.
Right.
I'm not an attorney, but we're an expert for folks that are in a denied status of a claim. So we see these all the time, and we're like, how did this get denied?
Yeah.
And they give weak excuses by these paid out engineering firms that said that there's, foot traffic or it was installed incorrectly, even though they offered the policy on an uninstalled correctly roof, which I don't understand how they can do that. And then say that it wasn't installed correctly, but yet they took the money for the premium to cover the damages on that not put together well roof.
Right.
Another failed reasons. And so we see on the other side where we actually give a real opinion on what occurred during that storm for the damage of the home. So it really does take a village. So any questions, comments, concerns, you can always send to us, info@contractortalkpodcast.com. Go to our website on that contractortalkpodcast.com. That'll lead you to our YouTube page, Facebook, and other ways to hear us, especially on Spotify and other audio ways to listen to us as well. So we thank you guys for listening to the show, Contractor Talk with Richie Kidwell. Talk to you guys later. See you.